go! We got equilibrium today, boys. Equilibrium is so tough. If you don't know what equilibrium is, you need this shit. I promise you. This is episode 8 of the Bootcamp. Equilibrium is the one concept that's going to allow you to catch the remainder of a trade if you miss the initial big move. You miss the initial big move and you're tweaking about it, don't worry. Equilibrium has got you covered. I also don't know why I look so freaking white on here, but yeah, we got equilibrium today. Let's get straight to it. So right here we have equilibrium. The way to actually see equilibrium is going to be with a tool called a Fibonacci tool, which is right here on the left-hand side. It's the third thing down. Click it. It's called a Fib retracement. You can start as well and have it placed on your chart like this. So the first thing you want to do is mark out from a low to a high, right? And this is just me showing you how to look at your Fib tool. And I'm going to show you my settings real quick. So let's remove these for now. Only pay attention to the ones that are marked. This, and this. If you don't have this on your chart, what you want to do is type in 0, type in 0.618, type in 1, type in 0.5, and have the same exact things that I have added here, okay? Just pause the video and copy this exact settings for the Fib retracement. Okay, now that we have that set up there, what you guys are going to want to understand is this zone right here. Let's get this brush. This zone right here between 0.5 and 0.618. This is going to be your equilibrium zone. It's going to be where price can retrace to. So all this means is that let's say you measured price from this zone to this zone, from this low to this high. What this wants to tell you is that a healthy retracement would look like something coming into here. And then from here, if we get a nice reaction off it, you can take a continuation trade to continue going higher. Now, what you can also use this for is understanding if price is completely reversing. Let's say you measure this range and price comes down and there's no reaction to this level. We just continue going lower. You can expect price to continue going lower. Okay. So once again, if we come up and we come down, tap into equilibrium, and see nice healthy price action, you can expect us to continue going higher. Okay. Now let's go take a look at an example on a chart. And this is from today, guys. Today's Tuesday, the 24th. We took this trade today, by the way. We took this longs here all the way up here. We caught 160 points. Pretty fire trade. But besides the point, let's say you missed out on this trade and you still want to get into continue going higher. Let's pretend you can't see this. Okay. Now, what you want to do is grab your Fibonacci tool to mark out your equilibrium. So you want to go from low to high if you're marking a bullish trend out, okay? Now, what do you see here? You see the 0.618 and the 0.5 level. Now, what we know is that if price taps into this level here, we want to expect a strong reaction off here to continue going higher, okay? Now, let's continue seeing what happens. So we tap into the equilibrium. You see we get a nice reaction off it. And let's say, in theory, we miss this trade and we wanted to enter here, okay? Let's just say, for the example being of this. Okay, let's say you enter here. Let's say you take a long trade and you put your stops here. And I don't know, let's say you target these highs right here. Let's say that's your trade, right? Let's see what happens. And you can see that is how you can use equilibrium in your favor to formulate a trade. So I took the trade from down here, but if you missed out from this trade and you wanted to continue on the move up, you see this retracement down, but you realize it's not a full reversal because we respect equilibrium. We're just balancing out price. Now, by seeing this, you can take a trade based off the reaction here and getting a entry model for a continuation, like right here. Okay. Now let's go look at an example on the opposite side of things, being bearish. Okay. Okay. Now this example here in the chart is from Monday, the 23rd. For me, this is from yesterday. If you're looking at a downtrend, you want to mark from high to low. Okay. Same thing again. Let's pretend that you don't know what's happening here. Okay. And you're understanding where equilibrium is. So you know that equilibrium is right here. So you want to see a tap into this level and get a nice respect of it in order to take a trade to continue going lower. So what do you get? You got to tap into this level. Nice reaction off there. Nice rejection. Let's see if you get a setup. Okay, let's say you take this short here based off equilibrium and just an IFEG. Let's say you take this trade, have your stops here, and you want to target this exact low. Okay, let's see what happens. Bang, that trade also plays out. And I don't even take these trades, guys. I'm just showing you guys how you can use equilibrium to your favor and understand how price moves. So in this case right here, you see equilibrium. We marked out from this swing high to this swing low. We mark out equilibrium where price is most likely to retrace into. Now you see that price does respect equilibrium, and you can take a trade based off the respect of this because you're understanding basic price action. Okay. And just to show you guys kind of how this works, and even simpler than this, okay? Even simpler. Get the path tool. Okay. We're gonna mark out swing low to swing high, okay? Price is always going to retrace into equilibrium, no matter if you're just continuing in a trend. If you're in an uptrend, you're always gonna want to see price tap into equilibrium. So let's say you miss the initial move, you can take a trade based off the respective equilibrium and continuation. Same thing for the downtrend, right? You just saw both examples, okay? So you downtrend, remember it's from top to bottom, and you want to see price tap into equilibrium. Same thing again, top to bottom. And that's kind of how you want to formulate your trades using equilibrium. Now, I know I haven't given you guys any type of models throughout this boot camp. I'm just showing you guys the basics right now so you guys understand how to trade and understand what you're using to trade. You want to understand all the basics, all the key concepts, and then use these concepts to formulate your own type of strategy that you want to use. But this is the most basic. You need to understand every single concept so then you can see which concepts you like and which concepts are best for you to use. So, equilibrium, very, very simple. I could not have made it any simpler. You have price trading one way. You're going to mark out a swing low to a swing high, and then a swing high to a swing low if you're going lower. Okay. Price will always retrace in a trend. Price needs to come back and rebalance. This is the whole idea of price. Price can't continue one way without rebalancing, right? Remember the episode of liquidity? We go from internal range to external range. Most of the time, equilibrium also does align with internal range liquidity being a fair value gap, okay? So keep this in mind. Learn how to use equilibrium here. This is the most simplest way possible of how to use it. Remember, it's the fib tool. One more time, it's the fib tool, zero point 0.5 to 0.618. This is your Fibonacci level, your equilibrium level. And I know people talk about premium and discount. I don't like to refer to it as this at all. But if you want to know what it is, the premium is up here and discount is down here. All this means is that you want to long, meaning go higher, in a discount, and you want to short when you are in a premium. Okay. I don't use these concepts a lot, but this is just something for you to understand if you are wondering what premium and discount means. Yeah, so that's the end of equilibrium for you guys. If you guys actually enjoyed this video and you got to understand a little bit more about trading, specifically equilibrium today, make sure to drop a like, comment what you guys want to see next. And if you guys want to trade with me every single day, I do live trade at 9:30 a.m. Eastern, and the link to my Discord is down below. So yeah, drop a like, subscribe, and join the Discord.